Here is your daily SPY market brief for July 9th. The SPY edged higher as a fierce rally in semiconductor and enterprise hardware names overpowered a broad retreat in consumer staples and energy. The tape screamed rotation AI infrastructure plays surged on unrelenting demand, while defensive dividend payers and oil stocks got dumped. The 6-month trends reveal a market that has been betting big on the data center buildout and punishing anything tied to cautious consumer spending. HPE surged nearly 10% after reports of a massive new AI server contract, extending its 6-month rally to over 122% as enterprises race to modernize data centers. Sandisk continued its extraordinary run, up 7.6% today and 377% over 6 months, fueled by insatiable demand for high-capacity flash storage and AI training clusters. Norwegian Cruise Line jumped 7% on strong booking data. The stock remains down nearly 19% over 6 months, reflecting lingering concerns about consumer discretionary spending. Lam Research gained 6% as the chip equipment sector rode the AI capex wave, with the stock up 60% in 6 months on expectations of sustained wafer fabrication investment. Invesco added 5.85% as rising equity markets boosted fee income prospects, though the stock is flat over 6 months, suggesting today's move is a catch-up trade. Aiden climbed 5.67 and CINF as Halo sees 3% as investors bet its next Gen AI accelerators will capture significant market share from rivals. Palo Alto Networks rose 5.5% as cybersecurity spending remains a top priority, with the stock up 79% in 6 months amid a wave of AI-driven threat prevention upgrades. Freeport-McMoRan gained 5.2% on a rebound in copper prices tied to green energy and grid modernization, though the stock is only up 3% over 6 months. Western Digital surged 5% alongside Sandisk, with its 6-month gain hitting 172% as the storage cycle boom shows no signs of cooling. Synchrony Financial rose 45% on optimism that a soft landing will keep credit losses in check, but the stock is still down 2% over 6 months. APA Corporation dropped 5% as clipped on demand fears, though the stock retains a 33% 6-month gain from earlier energy rallies. Paramount Skydance fell 0.3% after a disappointing streaming subscriber update, deepening its 6-month loss to 23% as cord cutting accelerates. Costco slid 4.2% as investors rotated out of consumer staples, with the stock now down 3.2% over 6 months amid slowing membership growth concerns. Cincinnati Financial lost 3.4% as the property casualty sector faced pressure from rising catastrophe loss estimates, though the stock is still up 7% over 6 months. PepsiCo declined 3.3% as defensive names fell out of favor, leaving the stock down 2.5% over 6 months despite stable earnings. McKesson dropped 3.2% on regulatories around drug pricing, extending its 6-month decline to 4% as policy uncertainty weighs. Philip Morris fell 3.69% as the rotation out of high dividend tobacco stocks accelerated, though it remains up nearly 10% over 6 months. Conagra Brands slid 3% as packaged food stocks continue to struggle, with the stock down nearly 20% over 6 months on volume and cost pressures. Jacobs Solutions lost 3% after a project delay announcement, adding to a 6-month decline of nearly 10% as infrastructure spending growth slows. Devon Energy dropped 3% alongside APA as oil prices weakened, but the stock still holds a 17% 6-month gain from earlier in the year. Today's session was a textbook tale of two markets. On one side, the AI infrastructure trade showed no mercy, with Sandisk, HPE, Western Digital, AMD, and Lam Research all posting outsized gains. These names aren't just having a good day. They are sitting on 6-month returns that range from 60% to a staggering 377%, reflecting a structural repricing of the entire semiconductor and enterprise hardware ecosystem. The common thread is the data center build-out, where hyperscalers are spending billions on storage, networking, and compute, and investors are rewarding every link in that supply chain. Even cybersecurity, represented by Palo Alto Networks, joined the party as AI-driven threats force constant upgrades. On the other side, the consumer staples and energy complex got hit hard. Costco, PepsiCo, Conagra, and Philip Morris all fell as money rotated out of slow growth, high dividend names. The 6-month charts for these stocks are flat to deeply negative, signaling that the market has been losing patience with defensive positioning for months. Energy stocks like APA and Devon Energy also slid, pressured by crude oil's inability to hold gains amid demand jitters. The outlier decliner, Paramount Skydance, reminds us that legacy media still faces existential streaming challenges. Looking ahead, the key question is whether this rotation has further to run. If bond yields stay elevated and economic data softens, the AI trade could face a valuation check. Tomorrow, watch for any earnings pre-announcements from the semiconductor space and the weekly jobless claims report, which could shift the soft landing narrative. Also, keep an eye on crude oil inventories. A surprise build could accelerate the energy sell-off. For now, the momentum is firmly with the AI builders, but the speed of these moves demands caution. That's your daily SPY market brief. This is not financial advice. See you tomorrow.